Ladies and gentlemen, this is a quick, urgent update. We have a new leaked report that shows banking insiders, banking executives and CEOs are selling stock at record pace. Now, this should come as a huge red flag because while the banks are trying to tell us, look, don't worry, everything's fine, everything's great, we've seen 2 more banks go under recently, and now we've got this report that shows that banking insiders are selling at record pace. So everyone, you definitely need to wake up and pay attention right now because your bank could be next. But okay, what bank stocks are these insiders selling the most, and also what's happening with some new data and information we got? Well, that's exactly what we're going to go over in today's video. So let's not waste any time, ladies and gentlemen. Let's get straight into the news, the facts, and the data. Well, look at this, everyone. This is not clickbait. It is happening now. Bank of America insiders sell 14 million of stock, possibly signaling caution ahead. People, this is what we see time and time again. Every single time I've got an article where CEOs and executives are selling stocks, we've normally seen a sell-off come soon after. And look at their stock, everyone. Since its peak in January 2022, it's now fallen 36%, and it did hit a bottom of minus 44.9%. Because what do you have to do? Just simply follow the money. Don't listen to what they say, listen to what they do. Now, I've been trying to warn you about this, everyone. Like I warned about earlier about this report, Bank of America has over $100 billion in paper losses after they've lost huge amounts of money in the bond market. Well, what's been happening with the bond market? Well, that's right, everyone. The bond market has been tanking, yields are surging. We've gone from a yield of around 3.3% in November all the way to around 4.2% in August. So what that simply means is the bonds these banks are holding on their balance sheet, they're going down in value, and it's going to lead to more losses. Now, normally this is okay if people don't withdraw their money, but if they try to withdraw their money now when the bank already has so much losses on these bonds, they simply won't have enough money to give. And I know you're thinking, well, don't worry, I've got FDIC insurance, everything's going to be fine. People, the FDIC, like I've shown you time and time again, they've only got enough to cover 1.5% of all US banking deposits. They have no faith in the banking system. I've shown you that leak footage of them in that hearing laughing about how they have no faith in the US banking system and they don't want information coming out there. They don't want people like me. This may be my last chance to warn you. Who knows, next week they could bring out a law banning people talking about possible bank failures. In the last year, many Bank of America Corporation insiders sold a substantial stake in the company, which may have sparked shareholders' attention. Now, knowing whether insiders are buying is usually more helpful when evaluating insider transactions, as insider selling can have various explanations. However, when multiple insiders sell stock over a specific duration, shareholders should take notice, as that could possibly be a red flag. Well, everyone, I completely agree. It's not possibly a red flag. It's a huge red flag. So okay, let's break down how much these transactions have been over last year. So we can see the biggest insider sale was by President of Global Corporate and Investment Banking Matthew Koder for 7.7 million worth of shares at about $35.91 per share. Now, why is this important? Well, we generally don't like to see insider selling, but the lower the sale price, the more it concerns us. It's some comfort that this sale was conducted at a price well above the current share price, which is $31.19, so it may not tell us anything about how insiders feel about the current share price. But I'll bring up a chart here. In the last year, Bank of America insiders didn't buy any company stock. So that should tell you all you need to know. They're selling at record pace and they have not bought one share. That tells you they know that this stock is going down lower and it's going much lower. Now, the last 3 months saw significant insider selling at Bank of America. In total, President of Regional Banking Dean dumped 2.4 million worth of shares in that time, and we didn't record any purchases whatsoever. This may suggest that some insiders think that the shares are not cheap. Well, people, I've got another theory, because every single week we get a new report from this new Federal Reserve facility for the banks where they can go ahead and get a bailout or pretty much get a loan against these bonds that have fallen hugely in value, which is absolutely crazy. Because if you or me make an investment, we can't run to the Federal Reserve and get a loan against these, assets that have fallen 50%. Well, we just got a new report from this that has just come out this week, and guess what? This usage of this Federal Reserve bailout facility has just hit hit another record, and it's going up every single week. So look at this, everyone. Usage of Fed emergency bailout facility hits new high and money market inflows continue. So I'll bring up a chart here. We can see the decoupling between money market inflows and bank deposits are continuing. Another chart here, the Fed's balance sheet shrank for the 8th straight week, tumbling 36.6 billion on the week to its lowest since July 2021. And like I warned about, the uses of the Federal Reserve's emergency bank bailout facility rose by 606 million to a new record high at 106 billion. So again, everyone, why they're trying to tell you, look, don't worry, everything's fine. Well, the banks are getting bailed out at record pace. Now, what the markets are all hoping is, and maybe what could save them, is if the Federal Reserve starts cutting interest rates. But we just got a new jobs report, and it's showing now that wages are surging again, or apparently wages are surging again and rising above the inflation rate. So this is now leading experts to warn that inflation could start to tick up again. So look at this, everyone. Some have warns on inflation reacceleration risk with too hot wage growth, because we just got the latest jobs report, and surprise, surprise, everyone, it was massively revised down. This has come a complete joke, everyone. The data we're getting from the US now, we might as well have the same data from China, because they put out these amazing job report, 500,000 jobs created. You know, the economy is doing so great. Bidenomics is doing so great. People have 3 times the amount of jobs as they did before, which is absolute baloney, everyone. The only reason why there's more jobs being created is because inflation is so high now. The cost of living is so high now. People have to work 2 to 3 jobs just to keep up with the basic essentials, not to get them, you know, luxuries or whatever, just to pay the rent, electricity, gas. And we're seeing now oil surging again. I've been driving past the petrol station, we call it here in Australia. In the US, you call it the gas station. I'm starting to see petrol go up again. I'm sure in the US, you're seeing gas prices go up again. And remember, oil is a fuel for the economy. So if oil goes up, everything in the economy is going to go up as well. But again, listen to this, everyone. Employees added 187,000 workers to their payrolls last month, fewer than economists had estimated, and prior month's figure was revised down, surprise, surprise, making it the weakest 2 months of gains in more than 2 years. Again, people, this is a complete joke. It went from being a blowout jobs report, this is the best jobs report we've seen in 2 years, to actually being revised down to being the worst in 2 years. I guess this is why they say we're living in a clown world. As overall job gains slowed, the labour market remains healthy, albeit perhaps too warm for the Federal Reserve's liking. Wages picked up at a higher rate than forecast. The unemployment rate also fell and remains near the lowest in decades. Participation remained at 62.6% for the 5th straight month. So again, you may think this is boring unemployment data. You may not be interested, but you have to pay attention to this, because if the unemployment rate still stays at 3.4%, or should I say the unemployment rate that they put up, the real unemployment rate is at least double that, well, that means the Federal Reserve may have to keep on lifting interest rates, because if wages go up, say 5%, well, that is much higher than their inflation target of 2%, and this could lead to more rate hikes. And why this ties in with what I was talking about with Bank of America, that means interest rates are going to have to go higher. These bonds are going to fall more in price, and that means these paper losses that these banks have on their balance sheets are about to get much bigger. There were signs of cooling throughout the report, though. Temporary help services continued their slide. Average hours ticked down, so people were working less. Maybe, you know, those part-time workers or casual workers aren't getting as much hours as before. And some categories led to the boom in job growth in the post-pandemic boom continued to cool, including manufacturing and transportation/warehousing. That's exactly right. I went over last week about the US trucking firm Yellow. They've gone into bankruptcy, and we're seeing a lot of the manufacturing jobs, a lot of the manufacturing industry and warehousing is really doing it tough. So where does this leave the Federal Reserve and the banks? Well, with some room to wait for signals from other data before their September meeting, Friday's report showed a labour market that is cooling, which works in policymakers' favour, but wage inflation is still double what the Fed thinks is healthy. Now we await next week's Consumer Price Index report as well. Now, the stock market didn't like this at all. The S&P 500 was down 2.3% over the past week, and there was some bad news for the biggest stock in the S&P 500. Why we have to pay attention to Apple is because of this. Apple has the most weight in the index in the S&P 500 of 7.5%, and they have a market capitalization of $3 trillion. That's right, one company's worth $3 trillion. So if their stock falls just 10%, that's $300 billion taken out of the S&P 500, and is what will trigger all the indices to sell off. So for the the third time this fiscal year, Apple has set a record for its growing service business, but the most valuable company on Wall Street has had a 3-quarter streak going, shrinking revenue. Revenue has slid for multiple quarters as Mac and iPad sales have flagged, and the company expects revenue for these products to fall by double digits from the last year, citing pent-up demand from the prior year quarter after factory shutdowns. In a note after earnings, analysts from Jefferies cautioned that Apple's revenue guidance and product commentary suggested that growth of the iPhone is lower than Wall Street anticipated. So everyone, again, this is very, very bad news for the S&P 500, for the stock market, because again, Apple is the biggest stock in the index. So if Apple goes down, it's going to bring the whole indices down. But everyone, I know what you're thinking. Well, okay, what is all this banking jargon? What is all this economic data? What is all this stock market data mean for you in simple terms? What this simply means is, everyone, insiders are selling. They know a sell-off is coming. We're starting to see the banks use more and more of this Federal Reserve bailout facility. We're seeing bond yields surge. That means there's going to be more losses for the banks. And we're also seeing wage growth reaccelerate. That's going to lead to higher interest rates, which again will lead to more losses for the banks and will create a domino effect. And like I said, if Apple stocks continue to sell off, well, we could see some more downward pressure in the stock market. But everyone, what do you think about all of this? Do you think the banks are fine? Let me know down below. Now, if you're wanting to learn more about how to build your wealth and master the cycles of gold, silver, and Bitcoin to protect yourself against a possible recession or a market melt-up for both scenarios, my university has a 50% discount off right now. Once the course is completed, the price will be doubling. Now, for all my loyal viewers and subscribers still watching, you're awesome. Thanks for watching. I'll see you all in the next video.